Welcome back to the Audit Innovation Lab. Process audits identify the specific financial leaks that leave no physical footprint. In the corporate world, these systems are the primary defense against silent heists. Today, we are analyzing a case file known as the double-dip deception. It is a specific type of ghost crime that went completely undetected by standard security. This single exploit drained 20 lakhs INR directly from the company's bottom line. This loss occurred without a cyber attack or a physical break-in. Instead, the money was siphoned through normal, everyday company operations. The process began when a company hired an elite engineering firm for a critical repair contract. This chart compares the base contract cost with the premium overheads the vendor requested. They justified these high rates by citing the costs of outstation travel, premium lodging, daily cabs, and specialized per diems. Facing an urgent repair, the commercial team accepted these justifications and agreed to the inflated rates. However, look at what happened during the final paperwork phase. When the purchase order was drafted, those specific travel and lodging justifications were entirely omitted from the terms and conditions. The final document simply listed a single, vague total. This disconnect between the verbal negotiation and the finalized PO created a massive financial vulnerability in the system. Once the contract was signed, the elite vendor team arrived at the site to begin work. The maintenance head met the team upon arrival. He had no access to the confidential commercial terms, but he followed the standard protocol for hosting VIP contractors. To facilitate the work, the maintenance head provided the contractors with free VIP access to the company guest house, company dining facilities, and company vehicles. This flowchart illustrates the double dip. The vendor receives cash on the left for the travel costs negotiated in the PO. Meanwhile, the company pays its own internal costs on the right to provide those same services for free. Technically, the maintenance head followed all existing facility policies, but because the commercial and maintenance departments operated in isolation, the vendor was able to exploit the gap between their two different sets of rules. The investigation began when an internal audit consultant reviewed the company's facility usage. The auditor pulled the logs from the VIP guest house and compared them to the administrative records for company vehicles. This Venn diagram compares guest house logs with the active vendor list. The intersection shows contractors on both documents simultaneously. By calculating the cost of these services against the vendor's travel allowances, the auditor identified 20 lakhs INR in financial leakage. The siloed data between the commercial team, maintenance, and administration allowed this loss to occur without triggering a single internal alert. Preventing this exploit requires 3 specific technical controls to bridge these departmental gaps. Control 1 is transparent PO formatting. It mandates that all travel and lodging costs be explicitly itemized and labeled as vendor scope in the legal terms and conditions of the PO. To remove the risk of human error, Control 2 introduces an ERP facility block. The ERP logic works like this. Before a guest house booking is finalized, the system checks the linked PO. If it finds a vendor scope tag, the system routes a debit note to the vendor's invoice to recover the costs. Finally, Control 3 requires cross-functional reconciliation. Administration logs are periodically cross-referenced with accounts payable to identify any unauthorized usage of company assets. These controls convert isolated departmental records into an integrated financial defense system. The internal auditor serves as the final technical barrier protecting a company's capital from this type of invisible leakage. Recovering 20 lakhs INR provides a direct, measurable impact on the company's financial health. Visit riskvigilantbarat.com to master modern risk advisory and learn to secure the future of your organization.